how does this strategy create stability for the long-term value for investors?
Yeah. So, another point, another framework we use when considering investments is number one, what is the return of capital? So, how are you going to get your capital back? When you're looking at investments, those are the first thing you want to look at. Like, okay, the returns might be great. It might be a sexy investment, but is it going to get stuck? Right. So, return of capital. We like
Brandon,
real
real
estate.
quick, this is what I call pigs get fat and hogs get slaughtered. I want to be a pig and I want to get fat.
Yeah, you said it best. So you want to make sure whatever you're looking at is something that's going to hold its value long term. It's not going to go to zero. This is why I'm not particularly big fan of picking individual stocks, because literally 99.99% of companies eventually go out of business. So you've got to, sell it at the right point at some time before that happens. So stuff like real estate, build to rent communities, where you're building these communities and either developing and selling them, or you're renting them out, they hold their value long term. The second is you've got return on capital. So this is the sexy number that everybody gets obsessed with. What are you making? 10%, 20%, 30%? That's the number. You don't want something that's not at least keeping up with inflation, right? A lot of people don't realize, with all the money printing that's going on, that their currency is getting debased at 8% per year. And
Right.
so you look at the core CPI index and you go, oh, that's inflation. The government's manipulating all that. If you look at how much money they're printing every single year, you're losing 8% per year. So if you're making 8%, you're just barely keeping up. That's why real world wages have not increased since the baby boomers have come to age and had that big economic boom. It's just very difficult for people to build wealth because of all the money printing. So that's the second, is return on your capital. And we like real estate because real estate can offer healthy double-digit returns, right? And it's secured by something that's real, where there's a need, like living space, that's not going away. And then the third is you've got return of capital, getting your money back. You've got the return on capital. And then the third one that you want to make sure that you're looking out for, the reason we really like real estate is it's got a lot of benefits long term, but what is that capital going to do over the long term for you? Is it going to end up increasing? Are you going to have exponential growth? What does that look like? And so we really like this because for the next 4 or 5 years, we think there's just going to be a lot of value and a lot of money moving into the affordable entry level housing space.